Good afternoon, everybody, and welcome back to the Charitable Payraise. It's my pleasure today to continue our series on leaders in retirement. And tonight, our guest is going to be John Norce, who is the president of the MP Group. John has been working extensively in the world of Medicare for 35 years, but turned it into a specialty business 7 years ago. And it works with a large business that helps folks like you and me navigate the waters of Medicare. And today, we're going to dive deep. A lot of questions, and in full transparency, I'm a new client of John's, so I'm living the dream with him today. And these questions are extremely relevant. Matter of fact, in the midst of doing paperwork with Social Security and Medicare right now. So it's my pleasure to introduce John as the president of the group, and welcome to our Navigating Retirement Together series and the focus on Medicare and the Charitable Payraise. And hopefully learn about making some very good decisions today that'll help us in the future. John, why don't you give us just a minute about your business and
Sure.
your background?
Sure. So, Bill, again, thanks for having me. I guess good afternoon or good morning or good night, depending on when people are listening to this. MP Group was started with the sole mission to address the individuals that were transitioning into Medicare, with the process usually taking multiple steps and having multiple moving parts. Our goal was to simplify the process. Since we began operations in 2017, we've helped thousands of people transition into Medicare. We're an independent agency. We don't work with all the plans that are out there, but we work with a lot of them. Our platform is rooted in education. We love to make sure that our clients are the smartest clients on Medicare, because knowledge is ultimately what makes you make the right decisions. Medicare has rules. They allow you to change plans, for example, but you want to make sure that you're always starting your journey in the right direction so that the course corrections or adjustments are minor, not major. That's kind of our mission.
Well, it's your mission with me, so good.
That's right.
Great place to start.
That's right.
Let's take it from the top. For those who are not familiar with Medicare at all, why don't you give us a description of the government program? And while you're at it, why don't you talk a little bit about maybe looking down the line if there's anything you see in the future?
Sure. So Medicare was started in 1966. We refer to parts A and B as original Medicare because those were the first two components of Medicare. The first trivia, the first two enrollees in Medicare were Harry Truman and his wife. Medicare has since evolved to add parts C and D and Medigap. Medicare is government health insurance. It's funded by the government, parts A and B. You are eligible if you are over 65 and a U.S. citizen. There's also Medicare eligible for people under 65 that qualify for certain disabilities, as well as at any age, if you are diagnosed with end-stage renal kidney disease or Lou Gehrig's disease, ALS, you're eligible at any time for Medicare. So that's basically the eligibility of Medicare. To elaborate on the growth of Medicare or the landscape of it, so Part A is hospital. If you go in the hospital, Part A is a payer. It also will cover if you're discharged from the hospital for skilled nursing, rehab benefits on an outpatient or inpatient basis. It'll cover hospice under Part A, and then it will cover some limited home health care. Part B is really what Medicare is about. And the reason that is because Part B is everything I just said. It's doctor's visits, MRIs, CAT scans, labs, x-rays, outpatient surgery, outpatient hospital, outpatient rehab, PT, OT, ST, durable medical equipment, ambulatory care, on and on is Part B. For most people, Part A won't have a premium because you or your spouse has paid 1.65% of your income into it as a tax into the government to cover those costs. Part B will have a premium. Whenever you enroll in Part B, there will be a premium that will be given to you. There's a base premium that's calculated every year, and then there's what's known as IRMAA, Income Related Monthly Adjustment Amount, which for higher income earners, you will pay an increased amount of money based on your income for that year. That is a variable number. So if your income changes year over year, your IRMA could change over every year. But again, that's a whole separate section we could talk about. But so combined A and B creates original Medicare and your complete benefits. Part C, which was started in 1997, is Medicare Advantage. Medicare Advantage is Medicare, A and B, administered through private insurance companies or a health plan. So individuals in all states of the country and District of Columbia have an option to elect to either have their benefits administered through A and B or opt to enroll in a Plan C. The Plan C will cover the same benefits as Medicare. It's required under the guidance of Medicare. So if a procedure is covered under A and B, it has to be covered by C. The only difference potentially could be the doctors who contract in the networks. Most of the Medicare Advantage plans are going to be an HMO, a PPO, a point of service, what's known as a PFFS. Many of those plans have a network. So that's something slightly different, although Medicare has a network. For those that have health insurance today, they're probably at some point of their working career have been on a plan that was even a PPO or an HMO. So they understand how those work. Most of the Medicare Advantage plans today that people will enroll in will also include prescription drug benefits, which I'll talk about in a second. So enrolling in Plan C is going to be an all-inclusive plan, one kind of ID card for everything. Leads me to Part D. Part D is the drug program started in 2006. The drug benefits, like I said, can be administered through Part C, but if you choose to get A and B as your primary payer of benefits, the Part D would be what we call a standalone, meaning all by itself drug plan. So that drug plan, whether you get it under C or D, are designed the exact same. The federal government has requirements in terms of the design of the program. There's different stages and there could be deductibles. It's all governed by the government. Those amounts can change year over year. There's some changes this year for next year that will impact the program. But A, B, and D is one option, and then C is an option under the government. There's one other program or product that you would consider. If you go the route of A, B, and D, you would want to add what's called Medigap or Medicare Supplement. And simply, that's a financial product. It's not something that's tied to health insurance. And what I mean by that is after A and B pays a claim, the supplement would pay the claim, or Medigap for the gap. So for example, under Medicare Part A, there's a $1,600 admission for a hospital stay from 1 to 60 days. That's considered a benefit period. If you have a supplement, most supplements would cover that $1,600. For Part B, there's a $226 deductible this year. Most plans expose an individual to that, so you'd have to pay that $226, after which Medicare pays $80, the supplement pays $20. That 20% you can buy a Medigap to address that supplement, that 20%, therefore alleviating you of those payments. Combined with all that, the biggest reason why you buy a Medigap is, unlike health insurance or even unlike Medicare Advantage plans, technically A and B has no out-of-pocket limit. By buying that Medigap policy, you will stem that tide and pass that responsibility onto the insurance company. So just to create lack of confusion, when you enroll in A and B, buy a Medigap, your care is coordinated through A and B, with Medigap being a secondary payer. Medigap doesn't have a network, for example. Medigap pays any Medicare provider. Medigap would trigger. So I said a lot, but hopefully that clarifies.
Oh, it's a lot of great
those
information,
questions.
but you've just underscored why we need folks like you, John, to help us navigate the jungle.
Yep.
Couple of questions. Just looking financially at the combination of A, B, and D that you just talked about versus C, from an out-of-pocket perspective. You mentioned also adding a Medigap if you're using B. I take it you would not need a Medigap if you took C, or am I wrong?
Yeah. So under Medicare Advantage Part C, the federal government establishes an out-of-pocket limit. So for this year, it's $8,300, which means that a plan that is in your area cannot offer a benefit plan with a higher out-of-pocket limit of $8,300 in network. They can be lower than that should they choose to, but they couldn't be higher than that. Some PPO plans will be a higher limit because it may combine in and out of network benefits, but overall it can't be higher than $8,300 on an in-network basis. For Medigap and Medicare, again, there's a $226 deductible for Part B. There's a $1,600 hospital admission for Part A. There's a $200 a day copay for days 21 through 100 if you go into a skilled nursing facility. So there are costs within Medicare, original Medicare, that your supplement would help you offset. But again, I'm somewhat ambiguous because there's so many plans, so many options. And frankly, being an educational event here, I can't speak about plans specifically, but knowing that the difference is if you only got A and B, there's no spending limit. And if you enroll in Medicare Advantage, there is a spending limit. And that's something important, obviously.
I hear the term Medicare Advantage. Could you elaborate a little bit on that? And you may have, and I may have just.
Yeah, that's just the Part C I referenced earlier.
Oh, okay.
That's Part C. And really, Part C came into prominence in 2006 because that's when these insurance companies and healthcare plans were able to offer an all-in-one plan, including your A, B, and D benefits under one card. And under that one card, in a sense, it simplifies it for some people because they don't have their A and B card, they don't have a supplement card, and they don't have a prescription plan. They have one card. Now, that's not the reason you should enroll in Medicare Advantage. I'm just saying it allowed people to have all their care coordinated through a single payer. And that, that for some people may be a great benefit.
Excellent. Quick question. For individuals like myself that have tried to save some money inside a health savings account over the years, how does that integrate, or does it not integrate? Such as, can I take money out of that to pay premiums?
Absolutely. So under the guidance of having an HSA upfront, let me say this much: when you turn 65, if you're still active at work, you cannot, and I'll repeat, cannot enroll in any parts of Medicare and continue to fund an HSA. That would create a tax penalty for you, and you do not want to do that. So if you're working past 65 and funding an HSA, do not enroll in any Medicare. And the key one is Part A, because most people working for a large employer that's over 20 employees will want to get Part A because it's a secondary payer to their health plan and it costs them zero premium because they've worked and paid taxes. However, by doing that and having Part A doesn't qualify as a high deductible health plan. So funding an HSA, while A isn't your primary payer of claims, you are in a tax code violation. It's also important to understand that when you do work past 65, your Part A, when you do apply, will retroactively be started 6 months. You have no choice in that. Why I mention that is because you want to coordinate the end of your HSA and your election into Medicare so that you do not overlap during that 6-month retroactive period.
Wow.
As far as using HSA funds, though, the good news is whatever you've accumulated can be used to pay. Again, some people have to pay for Part A, but Part A, Part B, Part C, and Part D premiums, deductibles, copays, and coinsurances associated with A, B, C, and D. Technically, the only thing you cannot pay for from an HSA is your Medicare supplement premium. All other costs are in play and eligible for your HSA to use those dollars for.
And speaking of paying, for those of us who have not started taking Social Security yet, how does payment work?
Yeah. So if you're enrolling in Medicare Part B, because that actually has a payment, if you're not on Social Security at the time you do that, there's a couple options. You can sign up for what's called Easy Pay, which is where the federal government on or around the 20th of every month will take money out of your bank account for your Part B payment, as well as potentially your Part D IRMA. If you're eligible for IRMA payment, they can take that out of there as well. Your Part C and Part D can also be paid out of Social Security when you go on it, and so would B and D IRMA be when you go on Social Security. But all your other plans, your Part C, your Part D, your Medigap would be paid out of a bank account. Some might offer a credit card as well, pre-Social Security enrollment. But
Excellent.
once you go on Social Security, your Part B and your Part D IRMA, for example, have to come out of your Social Security check. You cannot pay those any other way.
Any idea on what the premiums are for a person just starting off these days?
Yeah, so Medicare Part B starts this year at $164.90. That's the base premium. And then with IRMA, it goes up from there. The highest level over 750,000 is $562 and change. That's including the 164.90. The Part D IRMA will go from $12.20 if you're in the lowest IRMA bracket, all the way up to, if you're in that highest one, to $76. That's the range for time. And, people want to, that's public information you can find, but soon we'll get the 2024 numbers for that. We don't have them yet.
Are there alternatives to Part D, or is that just standard operating procedure?
No. So under the federal government program, unless you have other credible Part D coverage, if you don't enroll in Part D when you're first eligible, you would face a penalty when you do enroll. So let me give you a quick example. Someone's working and they retire at 65. They enroll in Medicare A, B, C, D, whatever they get. They're fine. They're perfectly fine. They wouldn't face a penalty, assuming their Part C had prescription drug coverage. Hypothetically, that same person worked till 67 and on January 1st retires. They would have 63 days from the loss of that employer coverage to enroll in a prescription drug plan. Again, whether it's through a C or a D. Okay. Should they not enroll in that 63-day window, they would then be invoked a 1% penalty for every month they go without. And the interesting thing is, unless it's a special circumstance, they would technically have to wait till October of the open enrollment period to enroll in Part D to start the following January.
Wow.
So in my example, that individual would face a 12% penalty.
Yeah, that adds up pretty quickly.
Yep. No.
Ouch.
No.
That's ouch. What does Medicare not cover?
Yeah. So the big one for conversations at the end of the day is it doesn't cover ADLs, activities of daily living. That's, unfortunately, a situation that a lot of people are faced with these days. And Medicare, unfortunately, will not cover bathing, meal prep, things along those lines. So it's, something that you shouldn't depend on Medicare. Now, Medicare in that circumstance is if someone was at their home and needed skilled nursing care or OT or PT or ST, that would be covered by Medicare. But having a home aide to help, buy groceries, cook food would not be covered. That's the big one. Original Medicare also, in the weeds, so to say, but relevant because it's important. Medicare doesn't cover dental, so your routine dental care or, implants, crowns, even the more, Medicare won't cover that stuff. Medicare, ironically, doesn't cover your annual eye exam. So if you need vision care for glasses and such, Medicare doesn't cover glasses, and Medicare doesn't cover hearing aids. So for those kind of situations, which, are popular or common, unfortunately, that's where Medicare falls short.
Okay, good to know. It's kind of the add-ons, but they're really important. And it sounds like the need for long-term care in one form or another is still very, very real, especially with folks living longer, which at the Charitable Payraise is a big part of our focus, is making sure that we've got the cash flow to cover some of those things you just mentioned for folks living longer and having those needs for greater and greater years. What are the biggest mistakes that folks make with Medicare?
Sure. The one thing that we often see, there's a couple. The first one is COBRA. COBRA after 65 doesn't work like COBRA pre-65. Pre-65, it's your primary payer, meaning that whether you were working for, Bill Lloyd Incorporated as an active employee or you go on COBRA, under those scenarios, under 65, that insurance company still pays your bills as what's called primary. When you turn 65, COBRA can no longer be primary. It can only be a secondary payer to Medicare. So if you are offered COBRA after 65, you need A and B. And then there are other rules stipulating within there, if you don't have A and B when you're offered COBRA, the minute you are offered A and B or enrolled in A and B, your COBRA technically cancels. But if you had, say, Part A, get offered COBRA, you would want to go get Part B immediately. Then you could complete your benefits. But you don't want to either negotiate, and it doesn't matter if your company says, hey, as part of your exit plan, we'll pay a year of COBRA. That doesn't make it primary. It's still a secondary payer. So we never want to see people make that mistake. Another mistake is the HSA funding. HSAs are, fairly popular. I know not everybody uses them, but, if you're, for example, on Social Security at 65, you automatically are enrolled in Part A and you can't lose it. So funding an HSA automatically puts you in a violation, and it's not, there's no escaping that situation. Other mistakes we see are, oftentimes people just working for small employers. So the federal government has a guideline of 20 employees. So if you're over 20 employees, that's considered a large employer group, and you can remain on that coverage and delay your enrollment into A and B. But if you're under 20 employees, Medicare is considered, again, that word I used earlier, primary, which means enrolling in Medicare A and B at 65 is obviously highly recommended. And then you would have to see if your employer plan would coordinate as a secondary payer, or you would have to go to the market and buy either a prescription drug plan, a Medicare Advantage, or a Medicare supplement, some combination of those, to resolve your full Medicare benefits. So those are some of the ones we commonly see.
Excellent. Great information. For folks that are continuing to work beyond 65 with large employers, and they are covered per your comment a moment ago, you said they become automatically enrolled in Part A?
No, not necessarily. It's always a common conversation, because if you're working past 65 and you're on a non-HSA plan, what happens is your health insurance still remains primary. Enrolling in Part A, which has no premium for most because they paid their taxes or their spouses paid their taxes,
Sure.
But in a sense, you would set up a situation where if you went in the hospital, your health insurance pays first, Part A pays second, the individual pays third. So you're kind of putting, whether you want to call it a second insurance or reinsurance, you're putting another layer between you and your wallet to reduce your financial exposure should you go in the hospital. And then it also, makes it easier in a sense to get Medicare later, because when you do apply for Part B, the application asks, do you have a Medicare number? And by obviously indicating you have a Medicare number, you already have an account set up, they can find you easier. So it does, in a sense, help you later.
I appreciate it. More and more Americans are working beyond age 70. Very common. And a lot of them are affiliated with major companies.
Yep.
And we're living longer. So these things that you're sharing with us are ultra important. How easy is it to make changes to your Medicare plan once you've started?
Sure. So the government has rules. They have enrollment periods, just like an employer might have an open enrollment. So in a calendar year, so to say, October 15th to December 7th of every year, so it's going to start here in a few weeks, you have what's called the annual enrollment period. And for anyone on Medicare, they're able to make changes to their Medicare benefits. And any changes they make during the annual enrollment period would start January of the following year. So that cycle repeats every year. If you're on Medicare Advantage on January 1st, you have what's known as the Medicare Advantage open enrollment period. So you're allowed to make a one-time change in your Medicare Advantage benefits in January, February, and March. I call it like a second chance. If you've missed your enrollment period on October 15th, the annual enrollment period for some reason, or you weren't sure, you just needed to buy more time. I guess you could kind of look at it. It's like filing an extension if you're an accountant for your client. But if you're on A and B with a supplement and a prescription today, you don't get that, so to say, second swing at it. There are special enrollments during the year. So, for example, if you move, Medicare is technically filed by counties. So if you relocate from one county to the next county, you have an opportunity to change your benefits. You may have to change your benefits. For example, Part C and Part D plans are filed by counties. So your plan may not be available in a new county that you're moving to. So you would have to change your plan whether you wanted to or not. But Medicare is, I think, understanding that change is inevitable and they will give you opportunities. I mean, another thing is if you missed your initial enrollment into Medicare A and B, they give you the general enrollment period in January, February, and March to add A and B should you have to pay for A or you just miss B for some reason. So there are valid enroll, and there's others, but those are the primary ones that a Medicare beneficiary would want to be aware of. The AEP, the Medicare Advantage open enrollment period, the GEP if they missed it, and then special enrollment periods for kind of life circumstances.
Couple of last questions for you. Does spousal coverage have to be identical?
Yeah. So for a lot of people, this is the first time when they go into Medicare, a household can elect different benefits. If there is a situation where two spouses are on the same employer plan, because that's how you do it. So this is an opportunity where each spouse can pick a plan reflective of their budget, their medical needs, their doctors, whatever their criteria is. And that plan could be completely different than their spouse. And there's nothing wrong with that. But for some, that may be a good thing. Maybe they needed a plan that was different than their spouses. Most commonly, we see spouses in a sense following each other in terms of the direction they choose, whether it's plan C, Medicare Advantage, or A, B, and D with a Medigap. But again, it doesn't have to be that way.
If the senior spouse is 65 and the junior spouse is 62, do they do it simultaneously?
Yeah. So what happens there is the 65-year-old would, if using that they're going to go into Medicare, they weren't working or such, then the 62-year-old would obviously have to find insurance to get them to 65.
Okay.
And then they would become Medicare eligible.
Okay.
Again, obviously there are circumstances where people under 65 can be eligible for Medicare due to disability and such, but using a healthy, for lack of a better word, 62-year-old that wouldn't qualify for any of those, ailments that make you Medicare eligible, they would have to find whether it's using COBRA for part of their, years to get there, or enrolling through the healthcare exchange, whatever would work for them.
Got it. I appreciate that because I think that's very common, and it definitely is planning something that people need to plan for in their financial planning. Another question: tax-free income. When you're calculating the IRMA and some of these things, how does tax-free income play into it, or does it?
Yeah. So again, I'm not an accountant. Don't give tax advice, but
sure.
What the easiest and shortest and accurate answer is IRMA is based on your MAGI, your modified adjusted gross income. So whatever, and it's a 2-year look back. So if we're in 2023, what your MAGI was in 2021 is used. So again, I can't give tax advice, but whatever would qualify as income under MAGI would be used. And if your income is exempt from MAGI, then good for you. But that's what the government uses.
Okay, good to know.
Yep.
Okay. And that's looked back on, the IRMA is recalculated annually?
Yep.
Okay.
So in November of every year, you'll get a Social Security statement that will tell you, relating to Medicare, what the Part B deductible is, what the Part B base premium is, if you're eligible for IRMA, what the IRMA payments are, and all other information relating to Medicare. So in that statement, it would already have looked back 2 years, pulled your income tax records, and if it was IRMA, if you're IRMA impacted, it would tell you that base premium and then the IRMA adjustment on that statement. And then in January of the next year, you would start paying obviously whatever amount was reflected of that. That's kind of standard, happens every year. Now you can appeal your IRMA if you have any one of 8 life events, work stoppage, which is retirement. So if you retire in July of a year and your income as a result of that retirement would be lower than 2 years
Sure.
ago, you can appeal. If you do work reduction, hypothetically, I work for Bill as a full-time employee and I go to some part-time status, and again, my income would be reduced because of that, or I leave and go to a consulting contract that my income drops on. That's a valid appeal. If you have a divorce, if you have a death of a spouse, those are some that you can appeal your IRMA. But if you just made a lot of money because you sold lots of stock or sold your house and 2 years later you want to ask for forgiveness, that won't qualify in one of those 8 reasons.
Interesting. Interesting. How does one evaluate
Sure.
their plan?
Sure. I mean, it's a federal program. There's extensive information on Medicare.gov that people can access. It's free. It's accurate. It's public information. Obviously, there's booklets that the government provides to educate people on Medicare. I'm sure the people that are watching this are inundated with mail, and there's obviously people they can call. There are people like myself all over the country, independent insurance agents that work with Medicare, that there's no cost to our services. They can contact their local state health insurance plan, the SHIP program, not plan, program, where there are volunteers that can help them. So there are resources, whatever they feel most comfortable with.
Okay.
We think we do a good job, but like everything, we're not for everybody. So there are options. But the good news is we're all swimming in the same pool.
Right.
Whatever plan people would be interested in, it's the same whether you called me, called another agent in another part of the country, the government, a ship, they're all the same.
True, but a person like yourself who specializes in this industry and the moving pieces would have a much better grasp on the various options available to us as consumers.
Yeah.
In terms of the various policies, the Medigap, the things of that nature that we want to use to supplement and make sure we're covering the right bases for our personal needs and our group of doctors.
That's right.
As the case may be.
Right. I mean, we may be, I don't think we're an exception, but all we do is Medicare. So I think our experience with thousands of clients allows us to know some of the innuendos that maybe the average consumer may not, and lending some of our experience to that. Again, we try to stay unbiased in what we do. We don't use the word steer people towards a certain type of plan or policy or company. We work with a lot of plans, but not all plans. And if there's a situation where there's a plan that we don't work with is best for the client, we would tell them that we're of the community. We want to be parts of the community, and we want to help people access the right healthcare for them. So if that path includes us, it's great. And if it doesn't, well, that's fine too. They can always come back to us again in the future for more assistance.
Excellent. One last question. Within your industry, is there a certification or a license or a specialty that would separate you and your firm and people like you from other advisors?
Sure. Not really, in a sense. There's a couple things that we have to do. We have to remain actively licensed and compliant in our resident state for insurance. So for us, it's health insurance. So we take continuing education classes every 2 years to maintain our licensing. Then we take what's called AHIP. It's a certification through the American Health Insurance plan that we take every year. We have to pass, and then there are separate certifications that we take with each of the companies that we partner with. So there is extensive knowledge, but it's great. It keeps us fresh, keeps us compliant with the changes in Medicare.
Sure.
And, I obviously have no problem doing it because I want to stay on the forefront of anything that's changing, with this year being the first year of the impact really of the Inflation Reduction Act on predominantly in the prescription drug benefits. We're learning about how that's impacting right now for the open enrollment that's starting.
I lied. One more question, and then we're going to wrap it up. But we do live in an area surrounded by tons of military.
Yep.
And like my parents, who were on, campus coverage and all this sort of stuff for life. How does that play into these decisions?
Sure. So most of those individuals still have to get Part A and B. There, I don't, and when I say all, probably all need to. I don't know of a situation, but A and B would be part of their solution. So, for example, the call we commonly get is TRICARE.
Yes.
So TRICARE, you need A and B. You have to have A and B because TRICARE is only a secondary payer, and TRICARE operates like that supplement and Part D program, where your providers would bill Medicare first and then TRICARE second. Although TRICARE, again, being the opportunity, for example, if you leave the country, TRICARE would pay outside of the U.S. where Medicare doesn't. So there are some things, but the point is, VA benefits, you still want to get A and B. The point is, it's even retirees from large corporations, most of those retiree plans are going to require to have A and B. So it's hard. There's 64 million people on Medicare right now.
Wow.
About half are on Medicare Advantage. About 13 million are on supplements. So you're talking about that's like 43 million, and the balance could be on employer plans, or TRICARE type stuff. Big program. Sure. They estimate 80 million people by 2030, I think is the right number. So
excellent. Well, listen, John, thank you for spending your afternoon with us today. The information is unbelievable and unbelievably important. For those of you that might want to take a look and get some more information directly from John's firm, his website is MP Group, like Mama and Papa Group.org. And you can definitely get a hold of John through that as well. But thank you very much for joining us today and giving us a host of information that will be very valuable for those as people are putting together their retirement plans and venturing in that direction. So we thank you, and we look forward to continuing our series in future weeks on leaders in retirement. And make sure that you reach out to John or folks that are in the same boat as John and get good advice and make the right decisions on your Medicare planning. And we look forward to working with you as well at the Charitable Payraise. Have a great afternoon. Take care, John.
Thanks, Bill.
Bye-bye.